session now. We are live. All right. So, hello everyone, and welcome back to another episode of the Market Outlook series. I'm Kavita Agrawal, the founder of eXp Invest, and today we are here to talk about. And today we are here to talk about, like every week, about Nifty indices, sector rotation, and so on and so forth. So after this session, I will do interaction with the Zoom participants. So if you've joined the market discussion group by visiting expinvest.in/join, then you're welcome to prepare your questions, and I will take on the questions after the session. After I am done presenting my screen, right? So let's quickly just give me a second while I launch the Zoom meeting. There we go. The Zoom meeting is also launched. Let me share the screen there as well. Perfect. So this is ready to go. Awesome. Okay. So we'll start off with the analysis of Nifty. Now, if you remember on the Nifty's chart, we have been talking about on Nifty's chart, we have been talking about this little negative divergence over here between on the 75-minute time frame, right? And we had observed this negative divergence was not a strong negative divergence. In fact, it was quite a weak negative divergence. So let me share my screen on Zoom as well as this. Right. And Sarthak, we will answer your question when we begin with sector rotation questions. So on Nifty's chart, we noted this negative divergence, but as you can see, it's not a strong negative divergence. It's a weak negative divergence. As such, Nifty did take some consolidation. In the last few days, last 2 days to be specific, it's been taking support at the 20 EMA. And 20 EMA is a very important support, especially once a strong bull trend has been established in the market. And this has been observed time and time again in the past, right? The 20 EMA acts as a strong support. So this time also the 20 EMA has come into the rescue. Today, Nifty has closed at or above, slightly above 25,000 level, and I expect this rally to actually continue from here onwards, right? But how does this translate on other key sectors? We will see that now. Now let's start off with FMCG, and we want to change this date to June 6th, right? So whichever sectors we see are bullish, we are going to retain in this segment. Others where we see potential, we'll move to this section, and neutral sectors are going to continue. Now, in the last week, this week that has gone by, there's been a lot of shuffling in the market. Strong rallies have unfolded in stocks, especially the defense sector. Chemical sector has also come into favor. And today also I saw a lot of important breakouts happen across markets. Lots of stocks have started to go overbought on the daily chart, which typically triggers super trender rallies in stocks with the super trender characteristic. So that is why today's weekly session is very important, and therefore we started with the session an hour early to cover as much ground and look at things with as much detail as we can. All right. Now, starting off with the FMCG sector. Now, what I see in the last week, the FMCG sector, so the FMCG sector is definitely in the bullish zone, in the sense that back in April and all the way through April, on the 75-minute time frame, it stayed very strongly overbought. And even though since then it's been in consolidation, number one, it's been taking support at this 100 EMA right here. And number two, it has not broken below the level of 40 on the 75-minute time frame, right? So these indicate that the underlying momentum is still strong on the FMCG sector, even though the stock itself is not the stocks in the sector itself are not experiencing strong rallies, but that can change now. Why do I think that? Because if you notice here very closely, the price has been taking support at this level, but if you look at the RSI is no longer here. The RSI is already heading higher on the 75-minute time frame, indicating that a positive divergence has developed, right? So I would expect the FMCG to show some rally. However, remember that in the market, it is not the availability of opportunity that's a problem. It is selecting the best and the highest quality opportunities, that is, opportunities that offer the most risk reward ratio. So, even though the FMCG sector is looking positive here, that does not necessarily mean that the FMCG sector is the best allocation for your capital, because FMCG sector is a slow mover, right? All right, let's move on to the next sector now. Give me a moment here. Perfect. Okay. So we will retain FMCG in the bullish sector. What about Bank Nifty? Bank Nifty today, HDFC Bank, by the way, gave a pretty good breakout from its previous high in consolidation zone, right? So we can see the reflection of that on the Bank Nifty as well, which, I mean, honestly, the charts are very, very identical for the HDFC Bank and the Bank Nifty. And you can see a breakout here as well on the 75-minute time frame. It's gone overbought. Honestly, personally, for banks, I find investing or holding a bank ETF when there is a potential uh, rally expected. I find the bank ETFs a better investment than individual banking stocks, because bank is a very complex sector to assess, and I think holding on to a banking ETF gives a much better uh, exposure and kind of a uh, protection against the risk that individual banks are subject to, right? But coming back to the sector, it looks like the private bank sector, or the Bank Nifty, is looking quite bullish. And if this rally sustains in the broad market, I would expect it to rally as far as 60,000 in the coming times, right? So that's that. Moving on to the CNX Auto. All right, so CNX Auto, Maruti, if you've seen the chart of Maruti, wonderful rally, right? So I also think that Bajaj Auto is also looking pretty attractive. So 20 EMA here has again given support. Now remember, the auto sector index has already established a higher high, has broken above key EMA supports, resistances. On the daily chart, has gone overbought. So all of these things are looking very attractive for the auto sector. So I would expect a rally to unfold here and continue. So auto sector also continues to look very attractive. Defense sector obviously continues to remain very, very attractive. Do expect a little bit of correction here, because again, nothing to worry about. This, I will take this opportunity also to answer Sarthak's question. So Sarthak on YouTube has asked why chemical and defense sector is down today. See, Sarthak, if you've ever participated in a marathon, you don't keep running non-stop, right? You do take breathers. Same way, a stock or a sector like defense, which is in a marathon since the last few years, right? It needs to stop for breath. Here also, if you see back on 19th and 20th May, it took a similar kind of a breather, and since then it continued the rally once more. If I look at the daily chart here, I see a very strong rally unfolding, and I think this will again be just a temporary breather, and the overall rally is going to continue once more. I am looking at a support of around 8800 on the sector index, and on individual stocks also I'm expecting a retest of the previous high and the RSI of the 75-minute time frame to test the level of 60, maybe 55, and then continue the rally. Now, my eyes also caught a comment from a member on Instagram So Suraj is asking, why is the 75-minute time frame preferred over the daily time frame? So Suraj, the daily time frames response time is really long. So if you observe a setup uh, building up on the daily time frame, the realization time for that can be in months, right? Whereas a 75-minute time frame gives a relatively faster response. So since I am interested in short-term swing trading more, the 75-minute time frames trends and observations are more relevant for me. Now, someone else in the audience might also have the question, why am I trading with on the basis of 75-minute charts and not the 60 minutes chart? I have answered this question multiple times in the past, but I don't mind answering it again. So, if you look at the number of minutes in the Indian equity market, it's 375. Okay, let me pull out the calculator for this. So 375, when you divide by an hour, which is 60 minutes, you get 6.25 candles, which means every seventh candle that you see on the hourly chart is an incomplete candle, which means the quality of data that you're looking at is compromised. Whereas if you instead use the 75-minute time frame, it is a whole number, which means that every 1 day's trading hour or trading hours get broken down into 5 neat candles, giving you a complete picture which is not compromised for want of better quality. So this is why 75-minute time frame is more preferred by me. Let's move on to the analysis of the infra sector. And here again, what I can see is a weak negative divergence had forged here. And since May 19th, no rally had unfolded here. In fact, there was consolidation happening. But now it appears like the correction is over because the 20 EMA has lent support and we can expect a rally to continue. So here you can see my alert also got triggered. So the weekly is bullish. The daily was waiting for RSI positive range shift and a higher high. We will assess now whether that's been established. 75-minute was giving us mixed signals, but I think now that has kind of subsided, and I'm happy to believe on the basis of what I'm seeing on the chart that the infra sector has turned bullish on the 75-minute time frame. I think there was mixed signals between 6th March all the way till 8th March, but after that, especially since 17th April, 8th April, since 17th April onwards, I think the signal has turned pretty bullish, right? And the confirmation of that is coming just now. So here a higher high has been established, because on the daily chart we can see that this previous high has been breached. So we have a higher high, we have a pullback, we have a rally. So the infra sector is also quite bullish now. Realty sector has really come around. There was a strong rally unfolding already, but this rally has really caught on momentum now. On the daily time frame, if you notice, the overbought zone has been established pretty strongly, and this indicates to us that the rally should continue. So all the sectors that we've initially identified as bullish continue to remain quite bullish even now. Now let's look at some of the neutral sectors and see whether they have potential to turn bullish or not. All right. Let's look at pharma. So on the pharma chart, what are we seeing? This alert that we had set for a formation of a higher high has not yet been triggered, and even the pharma stocks, are giving very frustrating moves and unclear trade setups right now. So I think I'm going to continue to keep pharma sector in neutral. Healthcare sector analysis typically is very, very similar to that of the pharma sector. So I'm not going to do a separate analysis there. Now, consumer durable sector, here I can see bullishness definitely building up, even though the RSI on the daily chart has not yet gone overbought. I do see the formation of a higher high. I do see the sustenance above support. I see the 250 EMA, the price cap struggling to sustain above the 250 EMA. So there is positive activity here, but I wouldn't say that this is like the strongest sector that we have. Now, what about the PSU Bank? So there is a positive divergence on the PSU Bank here, and since a positive divergence, it has been rallying pretty strongly. I see this previous high has been breached, so a officially higher high has been formed for sure, and the daily time frames RSI is also gone overbought. So PSU Bank is looking quite strong now. What about finance? So today, if you notice, Bajaj Finance has given a very, very strong move, right? So finance sector is also now looking strong again. It was stuck in consolidation. I would say formation of a roughly a kind of a flag pattern, not a very inspiring flag pattern, but the strong rally followed by a consolidation does look like a flag pattern. So the finance sector is also back in rally, and I would expect the rally to continue for at least another 2-3%, which should translate to another about 7 to 10% rally in individual stocks, obviously subject to individual stock and chart analysis as well. What about private banks? I'm pretty sure that this is also looking bullish now, because Bank Nifty was bullish, finance is bullish, PSU Bank is bullish. So why should private banking sector stay behind? So yes, this also is looking bullish. So you will see that almost every sector that I am assessing right now is looking bullish. Why is this happening? This is because the underlying trend in the market itself has become very bullish now. If you are new to the market, or if you're not approaching the market on the basis of analysis, just be aware that there is a risk that you may get sucked into herd mentality. What is herd mentality? Herd mentality is basically a tendency of humans to chase market trends, to buy what everybody is buying. So you will see strong rallies in defense sectors or in banks, but you don't enter stocks on the basis of objective analysis, which would typically and ideally indicate to you to enter the stocks before the rally has unfolded, which is what my Trade Together program or short term portfolio building members receive. Instead, you will act out of your biases like the herd mentality, or like your own fear of missing out, because of which you will enter stocks too late after the rally has unfolded, believing that the rally that you witnessed right now is going to continue into the future, also called the recency bias. Okay, so be aware of these things so you don't make these mistakes in the market. And if you are not adept at assessing stocks, analyzing charts, I suggest you reach out to a SEBI registered research analyst and avail their services. If you're interested in working with me, you can simply visit my website expinvest.in and see the services that are there, connect with my team, understand things, and take a better balanced approach to the market. You can also join my Telegram channel, Trade with Kavita, to get more information about my services, my campaigns, my market insights. Right. So I already mentioned in my Telegram channel, and I've been mentioning this repeatedly, that we are expecting rally confidence seems to be returning based on the movements of the frontier stocks, right? So confidence has been returning in the market. This was already posted earlier yesterday, and today we saw fabulous rally in the market. So if you want to stay ahead of the market, make sure that you join my Telegram channel. Just search Trade with Kavita. I will also share the link to make it easier for you in the comment section. So give me a second. I will say one thing, that there are unfortunately a lot of fake channels running with my name and my image. So just make sure that you're joining the absolute correct channel. If you see any crypto post or any options trading being encouraged, then that is not me. Okay. In my channel, you will see information about my live sessions, my market insights, and you will see high quality posts about potential stocks that I may be giving recommendations. So, for example, I today I gave a recommendation in a home furnishing stock, and the specs are mentioned here. The name of the stock has been removed, obviously. The remarks have been mentioned here, and the link to how you can enroll for my services has also been mentioned here, right? So the idea is to just guide you in the right direction, and once you make the leap or make the decisive move to work in a systematic manner, then help you out with that. All right, let's continue. So we have consumer durable sector. So I'm going to continue to keep consumer durable sector in the neutral because I don't think the quality of signal that it is giving right now is as high as the ones that we've seen in the auto, defense, infra, realty, banking, finance, FMCG, so on. So I will wait for it to kind of go overbought on the daily time frame. Until then, we are going to continue to keep consumer durables in neutral. All right. Okay. Okay, so RD is asking that capital market stocks are in rally. Is it time to book them? I don't think it is time to book them now. RD, what you're experiencing is the loss aversion bias. You're seeing a little bit of profit in your portfolio and you're itching to get a kick out of it and you want to book profits. That is not a very good strategy. Like I said, the stock market rally has just begun because the Nifty has just seen the 20 EMA support. 25,000 level has just been crossed. 24,800 support has just been taken. So the rally is still very raw, right? It has more upside to unfold into. What I would suggest you do instead of booking profits outright is trail your positions. Refer to the 75-minute time frame, and uh, on the basis of the support, place your stop loss slightly below the support levels so that you don't miss out on the rally that is unfolding, and at the same time you're able to protect your capital from potential drawdowns. All right, looking at the oil and gas. So I think now is when I finally can say that the oil and gas has turned bullish. Why? Because it has established a higher high on 75-minute. It has established a higher high finally on the daily chart. The 20 EMA has come in and given strong support to the price. So I think overall the oil and gas is definitely starting to look bullish, right? Moving on and looking at the energy sector. So energy sector is right there at the precipice. I think next week we'll be able to mark this also as bullish, but right now it is not there yet. So I'm going to continue to keep the energy sector in the neutral segment. Mayur is asking, have you seen the growth of Angel One? Mayur, Angel One is part of my long-term recommendation plan since a long time. So what you're calling growth of Angel One right now, my members are currently saying that as unrealized profits in their portfolio. So Adarsh is asking, do you think that pharma can go for a long-term consolidation period from here, just like how chemical consolidated over previous years? So Adarsh, one thing to know about sectors like chemical and pharma and healthcare is that they are super cyclical. So to understand that, you should look at their weekly time frame, and you will see that these sectors have a tendency to rally for a couple years and then go into correction for a couple years. So because the pharma sector has in the recent past given quite a bit of a rally, it wouldn't come as a surprise to me if it does go into consolidation or correction for another couple years or so, right? So right now, I don't think the pharma sector is where you should look out for to invest your money in, because other sectors are giving much higher quality signals, which is what you should pursue. Uh, Taking a look at the PSE sector, so the PSE sector has turned bullish, it would appear to me, because higher highs have been forged, and I would say the level of 60 is kind of getting resisted, but it is also kind of getting a little bit of a breach. So I was initially skeptical of moving the PSE sector to the bullish segment, but because the overall market has turned, and because this sector is a super trender and it has clearly established a bottom price here, I would say that this sector is ready to rally again. It's definitely forming the higher high, higher low formation. And if you look at defense stocks also, they are also public sector enterprises at the end of the day, and they are giving pretty strong rallies. So we would expect this sector to definitely continue to give strong upside, and we take it from there. So pharma we've done, energy we've done, consumption. So okay, consumption is also looking bullish, but again, not my most favorite. So I'm going to move FMCG and consumption. I'm going to retain them in the bullish segment, but I'm going to move them lower. Next, let's look at media. Well, media is also giving bullish like signals, but honestly I am not a big fan of the media sector, because it just, the stocks are not very high quality. There is a lot of corporate governance issues typically in media stocks, so I personally don't prefer to trade actively in the media sector. So even though it looks bullish, I'm going to move it to the bullish segment, but I don't think I'll be actively looking out for opportunities there. I would say the only uh, um, I would say the only stock in the media sector that I feel comfortable trading is Sun TV, right? Um, so Aman Patel is asking, have you taken Nifty 50 as reference for RSI? Aman, I think you don't get the concept of RSI. Relative Strength Index does not take into consideration another stock or another index for relative strength. It compares the price action analysis of the stock itself within a certain period. So in my case, that's 25 period. The default is usually 14 period. So within the 14 period, it will compare within the stock's price action itself how many days it has gone up, how many days it has gone down, and take a calculation of that to plot the RSI. So the RSI is actually showing you the relative strength of the price action against the period that it takes into consideration. So I think your concept of RSI is mistaken here. All right, moving on to the metal index. Um, the metal index, I know a lot of you are excited to start trading in the metal index, but I don't think now is a very good time. I think you should wait for slightly more confirmation. I personally want to see the metal index go above at least this level, but typically the metal index does a lot better in terms of rally once it's established above a lifetime high. So I will be more comfortable trading actively, doing active swing trades in the metal sector once it crosses above the level of 10,000. So I'm going to continue keeping it in the neutral sector. Um, Talking about IT, so IT has not yet started to show the kind of resilience which we need to take long term positions in, or even do short term, active short term trading in IT segment. So we will continue to keep IT here, because you can see it's clearly below the 250 EMA and also taking strong resistance from the 100 EMA, right? So this is not a very good signal. So it makes us uncomfortable, and we don't want to trade in something which is not absolutely bullish, which is not um, giving us the sense of confidence when we look at the chart. If the chart is asking us to look for strength, then it's not a strong chart, right? So that's that. The last sector that we're going to look at is commodities. And even in commodities, the daily chart is not giving very overbought signal. And also, if it comes to making a choice in which sector and which stocks I'm going to trade in, commodity is not my topmost choice. So I'm going to continue to keep it. So there's a weird comment, why is the voice sound AI and English? Because, well, I am talking in English and I don't know about why my voice is sounding AI. So, anyways, this was about all the sectors that we had for today. I will now take you through the indices, um, the inter-sector index chart, where you will be able to see the comparison, right? So since let's take 2 weeks into consideration here. So since the closing on so this I actually want to change to CNX 500, right? Not Nifty 50, right? So, comparing other sector charts to CNX 500, we can see the realty sector has done really well in the last 2 weeks. It's gonna come up to almost 11%, and this rally is live unfolding on a lot of realty stocks where there's very good rally unfolding right now. So this rally in realty is expected to continue close behind the PSU and the defense. So again, we've already assessed strong rally there. So PSU Bank has moved up nearly 6%. The PSU Bank sector index has moved up nearly 6% in the last 2 weeks. And the defense sector has moved up 5.5%. And again, like I said, both these rallies, all of these rallies are expected to continue. So in the last 2 weeks, only four or only three sectors have actually outperformed the broad market, right? Which is really saying something. This chart in itself, right? Like, look at this image right now, focus on this image. This in itself is telling you the story of early winners. So the broad market is turning bullish now. The early winners of this rally have been realty, defense, and the PSU Bank. However, there is a lot of rally yet expected to unfold in the market. And we expect the metal sector is going to come out from below the CNX 500. The finance is expected to rally. The FMCG is expected to rally. The auto is expected to rally. Oil and gas is expected to rally. I don't see oil and gas on this chart. So let's just make sure that oil and gas is also added. There we go. Maybe it was added earlier because I didn't see anything really change on my charts. Yeah, here it is, oil and gas, right? But I've disturbed the assessment. So if I move this to previous week, right? So, okay, see, I moved this 1 week ahead, and you can already see in effect what I was just talking about. The metal sector has come up, the auto sector has come up, right? Commodities has come up, consumption has come up. So I do expect that more sectors like infra, maybe consumer durables, PSC, oil and gas, FMCG. I feel these will also start to catch up to the broad market and start outperforming anytime now, right? So that is that. We still have some time left for the session. So I would like to take a look at your queries. So I can see on Zoom, the participants have not shared any queries as of today, as of now. So I'm going to start looking at the comments which have been received from the members on YouTube, LinkedIn, and Instagram. All right. So, in order to understand the market better and trade better, which course is more suitable to pursue, CMT or CFA? So, Abhiram, it depends upon your objective. If you want to do active trading like I do, if you want to do swing trading or momentum trading, then definitely CMT is what you should pursue. I personally feel that CFA is often related with fundamental analysis, but to be honest, fundamental analysis is not a topic that is on a broad level covered in the CFA. The CFA is more concerned with the modeling aspect of it, the knowledge or the ratios aspect of it. But if you want to understand a broad sector, that study has to be done by you very independently, right? So if you want to trade actively in the market, the CMT is definitely what you should prefer, because it will give you extremely high level and extremely high quality, and all the way from high level to deep insights into price action analysis. So I did my CMT back in 2015 is when I completed all three levels. And since then, it's been 10 years now. Since then, I have been a very strong advocate in the favor of pursuing the CMT designation, right? So yeah, that's that. Let's see if there's any other broad query that I may have discussed. Okay, how to change the audio? Well, I think it's more of your systemic issue. Maybe you want to look at your laptop's systems and improve on that, because I don't see anybody else complaining about the quality of the audio. So I think it's just at your end. So Naman Rathi is asking, can you talk about data center stocks? If you can be more specific, Naman, and give me name of the stocks, I'll be happy to assist you with that. But I will avoid making a envelope or a broad commentary right now. All right, so views on sugar and ethanol sector as we expect good monsoon this year. So, okay, so let's look at maybe Balrampur Chini. Balrampur Chini is my favorite stock from this sector. So we'll remove the old drawings to give us a clean slate, because I have not looked at this stock for a very, very long time. And whenever I come back to a stock after a long time, I prefer to look at it on a clean chart rather than letting all the previous drawings and previous analysis, previous opinions create biases. So I do see that the Balrampur Chini stock has turned bullish again, and because the stock is highly cyclical and it has a strong underlying upward trending channel, I do expect it to continue trending upward. And a very conservative target for me here would be around the level of 745 from the current 611. But is now really a good time to buy into the stock? I Okay, depends. If it sustains above 620, then it's good to buy it immediately. If it doesn't, then wait for it to come back to the 20 EMA and then maybe take a position. Let's also look at Renuka sugars while we are on the topic of sugars. So here on Renuka sugar 75-minute time frame chart, there's definitely a negative divergence, and the rally here is not as strong as the one that we've seen on Balrampur Chini, but it does seem to be bottoming out, right? But this bottom out, I don't trust it. I think it can decline back to the level of 30, 31, right? And there maybe it can give a better opportunity to us. All right, let's see. I'm going to take only one stock per audience member. So please avoid including your watch list of multiple stocks in your comments. Okay. Okay, so I can see multiple people at the same time have asked for geofinance. So I'm going to look at geofinance now. So geofinance, based on the fundamentals. So technically, the chart doesn't really offer us much at this point, but from a fundamental perspective, I think it's a very strong stock. Obviously, it's a Reliance company, so no doubt about that. And I think for a long term investment, it's definitely a very, very strong candidate. And the fact that it gave opportunity to re-enter at the IPO listing price is incredible, right? So those who took advantage of that low, kudos to you. Great going. And for those who missed out, what are you really doing in the market, right? So here, if you see, this is where the trend again truly turned positive on geofinance, and I expect this strength to continue. So even if it does give a short-term dip back to 279, 280, which it might, right? If the broad market takes a little bit of a breather, it might come back to 280. But I think on an overall level, there is very high potential that the stock is going to go above its all-time high of around 400 rupees. Okay, next let's look at Natco Pharma. I already said the pharma stocks in general, the pharma sector is not looking so promising right now. So Natco Pharma is exactly reflecting what we've seen in the broad market. I don't see a lot of strength building up right here. There is a strong resistance at the level of 970. And unless this resistance is braved, I am not interested in taking position or trading in Natco Pharma. I If you have an existing position in Natco Pharma, or if you're holding massive losers in your portfolio, my strong advice to you would be to rip off the band-aid, let go of your loss aversion bias, and think about it from an objective perspective. The market is unfolding into a new rally. There is so much potential to make money. You're holding on to losers, you're wasting the potential of your own capital. It's better to realize your losses, take whatever capital remains, even if it's 75% of your original amount, and grow that better with, by buying good quality stocks instead of stocks like these which have already declined so much and are not even showing a bullish signal despite the broad market being so strong. All right. So Mahesh has a very good question. Do you do a dedicated section on Elliott Wave? Mahesh, I do a dedicated section on Elliott Wave. If you go over to my YouTube channel, EXP Invest, or just search my name, Kavita Agrawal, CMT CFA, you will, and you search on my channel Elliott Wave, you will see lots of videos on Elliott Wave. But I have not in a long time done like a dedicated video, but there are past videos which I've done. So if you want to learn Elliott Wave, those could be good guidance for you. But in my advanced swing trade training program, that is where I do a dedicated class in every batch on Elliott Wave, and we also use Elliott Wave in the analysis of stocks during our live sessions, during our classes, right? So the advanced swing trade training program, the new batch is going to start from September, and it's going to be 24 sessions long. I do 2 or 3 classes per week depending on my availability, right? So if you're interested in learning swing trading from me, and if you have a basic knowledge of the stock market, because I will not be touching upon the basics in the advanced program, and I don't have a basic course, right? Then you can visit expinvest.in/learn, expinvest.in/learn, and you can enroll into the program from there, right? Cool. So this is it for today. We will wrap up the session now. Thank you so much, everybody, for joining in, giving me your time, paying attention. And if you've liked this, whatever I've shared, please don't forget to drop a comment on the YouTube video, give a like, and maybe also send it to somebody who's interested in the stock market and is looking for high quality technical analysis insights. Right. So see you in my Telegram channel, where also the live session is broadcasted these days. So if you join my Telegram channel, that is kind of a very there's a that is where you get all the high quality updates and insights from me, right? Everywhere else it still goes out on other social media platforms, but it's a lot delayed there. So if you're already on my Telegram channel, thank you so much for being part of my community, and looking forward to growing together. With this, I take off now. I will see you again next on Monday at around 4 p.m. Until then, namaste. So Sandeep is asking how often do I come live? I try to come live thrice every week, Mondays, Wednesdays, and Fridays at 4 p.m. So again, you can join my Telegram channel to know when I'm going to come live. Sometimes I try but fail to come live because, like I said, the regular members know, I have a 6-month-old daughter who, sometimes wakes up and needs me when I'm supposed to come live. So then I have to obviously prioritize her. So because of that, then I'll come live at a different time, which may not be pre-scheduled on YouTube or LinkedIn, but it will be announced on my Telegram channel. So make sure that you're part of my Telegram channel if you're interested in being part of my live sessions in the future as well. Great. So thank you so much for joining in, everybody. See you again on Monday at 4 p.m. Have a great weekend ahead.